So the next thing we're going to talk about is the Delaware Statutory Trust, or the 1031 exchange. And I'll leave this slide up recently, but just, some of the main reason is just to you not want to pay those the capital gains this year. And we're deferring those taxes along the way, potentially increase income potential. When we're looking at the 1031 exchange, things that we would say is this: when you partner with a firm like ourselves, we go out and search for the 1031 exchange opportunities that you're looking for. We have various opportunities in various states. We have commercial, residential real estate. These are all opportunities that we look at, and we're able to work with our clients. So again, love to have a conversation with you. But just for those that aren't fully aware of the timeline that comes with this, is when we're looking at the 1031 exchange, there are some limitations, as the investor. So the investor, for them to relinquish the property, the purchase of the relinquished property goes into cash. That timeline is from day one, and before the end of 45 days, you have to identify up to 3 properties, regardless of their value, not to exceed 200% of the value of the relinquished property. And what we always tell clients who are doing 1031s on their own, when you work with a financial company like myself and GA Repple & Company, we can go out and we can be your third option if you've already identified 2 properties. Because if you've ever bought real estate, the timelines just never add up. So for the true timeline of the 1031 exchange, you do have to have this whole completed within 180 days, where the investor, after that time period, for you to require that property. So for us, we look at it as, why do a 1031 exchange with us is, our individuals, most importantly, is they want to retire being the landlord. So we give them diversification in multiple opportunities. We do provide various income streams from there, depending on what type of commercial property we have. We can reallocate your investment somewhere, so you don't have to put all your money in there, but the money you do put in a 1031 exchange, you would be able to avoid the capital gains. And that's going to be explained on this next slide here. So again, the big thing, what we try to do is we save on that being that identifiable property. So we can be that second or third option for the investors are on a call that are in real estate. Most of these opportunities that we work with typically have $100,000. And again, we go out and search the marketplace. We do have vendors that we work with on a regular basis. So we typically will just see what opportunities they have available, and we'll reach out to those for those are in a property. So and just in the chat function, I'm going to go ahead and put on for those who are looking to work with us in the future. I'm going to give you our contact information here real briefly. So make sure if you do have any questions, or if you do want to reach out, there's a link you can click on, our Calendly link as well. So I just thank you for that. I'll pause for a moment there. So when it comes to the 1031 exchange, this is actually the money that comes into it. So just to give an idea, so in this case, we're using a $1 million net sale, original cost of property. So we've done some assumptions here that the adjusted cost basis is $100,000. Total gain is $900,000. So again, here's some numbers here. This is depreciation recapture tax, capital gains tax. These are the surplus taxes. Of course, these are not determined what those are. But in this case, we're looking at net proceeds. Approximately about $850,000 is what you would be receiving from that $1 million sale. The advantages of the 1031 exchange is of course, same capital gains. However, we avoid the 25% depreciation recapture tax. We avoid and defer the capital gains tax, the Medicare surplus tax, individual state tax, and the total liability tax. So we avoid all that, and by putting that into a 1031 exchange. And our investors who like to do these, they just keep finding like-kinded exchanges under the IRS code, again, section 1031. So those are opportunities that we do offer. And of course, there's a lot of disclosures involved with these types of properties, because your money is typically illiquid during this time period. So most of these 1031 exchanges that we do work with are anywhere from a 5 to even a 7 or even 8 or 9 year hold. So we do let folks know that this is going to be a long-term hold. There's absolutely risk involved with that. When you do work with a company and a financial advisor like myself, our firm does a due diligence typically every offering that we do have also goes through a third party due diligence as well to make sure all the financials are correct as far as us moving forward on these opportunities. Go ahead. That was just for illustration purposes. Sell real estate is going to look different for everybody.